Okay, I think we'll get going. Uh, I see there are some more still to come. In fairness to those who are here on the dot, we'll get going. So you probably know on the way in that the webinar is being recorded. So um, when we're done, we will send out the slide deck and access to the recording. Um, as we go into it, this is put this down as key discussion points rather than an agenda. But I suppose what I'd like to do to start with, and our purpose in what we're going to go through here is like it's the journey stroke roadmap stroke how to. Many of you are already well down that journey. Many of you understand exactly what the issues are here. And my assumption is that every organization wants to do the right thing, and reducing carbon emissions or reducing the emissions per unit shipped is the right thing to do. Organizations want to be as accurate and as complete as they can and be driven by a net zero plan with a timeline. And increasingly, we're hearing more and more about the net zero plan and a driven timeline. The original timeline in Paris was 2050 for net zero. Well, that was probably targeted at very large organizations. But the achievement of net zero has been, particularly in the UK, accelerated to 2030 with some great purpose and a lot of buy-in. And we'll talk a little bit about that. Um, Now, in fairness, you may not meet the plan or the timeline, but even to have them as a guideline and an ambition is really something that motivates your people to be part of this whole process. And once you get that motivation, you'll always find ways of ensuring that progress is getting made with some regularity. But at the end of it, you have to ensure that the business thrives and survives. And sometimes people lose sight of that. Those that are passionate about this carbon reduction, think that perhaps people should go out of business too. But that's not how it works. So the carbon reduction objectives is secondary to the primary objectives of the business. And organizations have to do their business and should not compromise that doing of the business to reduce carbon emissions. There are also ways to achieve both. And I think this is hopefully from this session, you begin to get a sense of that. There are ways to do both. And the thing here is to find them. So today we're going to have a quick look at establishing the baseline, looking at the current footprint, your current carbon footprint, then turning that into strategic planning. And once you get strategic planning, you begin to develop a net zero plan, and that has milestones, targets, initiatives, and a timeline. And then there are pitfalls to it. There are places, there are cul-de-sacs that you wander into. Data accuracy is always an issue. I say it's always an issue because when this whole Paris Agreement took place and they began to talk about this whole ESG thing, there were all sorts of voices in the room. So from the very extreme climate denier all the way down to the passionate people passionate about going backwards in terms of economies, going backwards in terms of businesses, to worship Mother Earth. And you have everything in between. And obviously, then when you begin as a business to publish data, to collect data, the need for accuracy is very important because there's always somebody looking at your detail, and there is always somebody willing and able to challenge the veracity, the authenticity, and the accuracy of your data. So, credible data is important, very important, and something you can stand over. The reporting integrity, the communications process, and the transparency. Some of it's built into regulation. We'll look at that as we go through the slide deck. So um, the protocols where it all started. So you're looking at scope one, which are all the direct emissions. You're probably well familiar with these. And it covers most of the gases. The particular one, the most I suppose the one with the highest emission factor is the air conditioning stuff for the CFCs are, but mostly what you're talking about. And the standard methodology is carbon dioxide. So the carbon dioxide equivalent measured in either kilos or tons is the kind of stated, uh, it's the stated yardstick or currency through the whole process. The indirect emissions, the one and twos are relatively easy to reduce. There are proven methodologies, for example, renewable energy available now for most providers. So they might cost you a premium, but the truth is, have a look at it. There's plenty of available, so you can get a distance in the early steps there. And we'll focus a little bit on the all of the direct emissions. And this is probably where this is the hardest space for when you want to gather stuff. And we'll just it's I suppose summarize some of that. But from our perspective, there's always the scope threes, there's a place to start. And I suppose my thought here is don't let perfection get in the way of good. Make a start. You might wind up with some kind of an estimate about what your percentage emissions beyond what you've already got control of is, and do that probably in your plan. Put in that kind of factor that says we haven't got through all 47 aspects of the scope threes, but we get there because we're still working on it. Okay, so the greenhouse gas is the protocol is basically the touchstone for the beginning of all this and the definitions. And in order to establish the baseline, look at your primary data, and that is generally in the scope one and two. And you're better off to use hard data rather than uh, norms because the hard data is more defensible. And when you're looking at utility bills, try to ignore the price. I know it's difficult these days. Try to ignore the price. What you're looking at is the units. And the units have emission factors, and no matter what the price is, those units and emission factors multiplied together will give you the number that you're looking for. This gives you an idea of where the scopes would sit, and also it gives you an idea of what the three scopes, the complexity in the scope three emissions are. So there are varying and very, very many emissions factors for all the scopes as they break out. But if you look at down the bottom there, you have business travel, water, ground transport, for example. Most organizations will have shipping, most organizations will have waste. It's not rocket science, and it's you just think it through. One of the things you have to remember when you're starting this is that you're not the only one doing this. So, for example, if you take the transport companies like, for example, DHL, these organizations are moving towards their own net zero targets. Therefore, they have information to share. They have information they're proud of. They are happy to share that information. So you might think, God, I'll never know what my DHL freight emissions are associated with my freight. Believe me, the probability is they do, and they're willing to share it. They understand their obligation to contribute data to your plan. And don't be afraid to ask them. So it's and progress is being made all the time. So, for example, if you look at your employee transport survey, if you do that once a year, internally, the, depending on your headcount, but you will know your employees, your staff are moving towards EVs. They're moving to reduce their carbon footprint. So run the survey with some regularity to capture the benefit in the reduction effort associated with your scope three that deals with commute and staff travel. Okay, so basically, you're going back to Drucker here. You only manage what you measure, and the cornerstone of good business management is if you can't measure it, you can't improve it. So what we're looking here is performance tracking. So you're looking to improve processes first. I'm going to show you how this thing works. There's a good graphic here. But reducing the costs and reducing the carbon emission often happens at the same time. And for those of you who maybe made changes to lighting, for example, it's one of the big obvious ones that happen. You probably have payback calculations to make on it, but at the end of the day, most people who've done it are feeling the benefit both in their bank accounts and in their carbon emissions reduction. So there are sort of double wins out there, and the thing about them is find them. And people who found them are happy to share them. It's amazing how easy it is to get somebody to share their experience where they've made good carbon reduction. And they generally wind up with enthusiasm for that process. And basically, uh, there is an awful lot of things that you can do. And you might feel at the beginning, or you might have an ESG committee, or you might have somebody who kind of feels that the thing is impossible. It's not impossible if you have a plan and you have access to shared information, to good websites. There are all sorts of supports for many of the initiatives out there. And yeah, it's it's doable, I suppose, is the main mission. So the accountability and focus is the accountability in some cases is driven by regulation. In some cases, it's driven by voluntary standards. So whatever your motivation, or however you're being motivated, whether you've been driven into it by a supplier, whether you've been driven into it by a customer, or driven into doing this by a regulator, or you're just passionate about doing the thing and feeling it's good for the planet and you want to get it done, you want to be part of that movement, whatever it is, the measurement and the success in the measurement keeps the focus on. People are looking at it and saying, yeah, we're making progress here. And no matter how small the progress, it's reportable. Always remember, though, that you've got your business growth issue in the background. And the business growth is important because that's what keeps you basically open, your doors open. And to get the business growth benefit, to make the business growth benefit visible, organizations use an intensity metric. And that intensity metric can give you a sense of the improvement you're making overall in the context of your growing business. The one I cite usually in training is the aviation sector. They have an intensity metric which is grams per passenger per kilometer. And that's universal in the space because they have a net zero plan that was driven by IATA, must be now 7, 8 years ago. And they laid it down for the aviation sector. There's an awful lot of technical development. There's sustainable aircraft fuel (SAF) that has to be made. There's a whole ream of technical and things that haven't been invented yet, listed in that plan. Ideas that could cause the net zero. In the meantime, they're able to show the reduction and the effect of those introductions of those initiatives, like buying new aircraft, buying better engines, like the introduction of mixing SAF with the avgas, and they're showing that the grams per passenger per kilometer are coming down, while at the same time continuing to advertise their services and increase their growth. So it's the intensity metric is a very useful way to motivate or to see people, to let your people see that you are making progress. The strategic planning is important. So there's a in when you start to you begin to put a net zero plan together, what you're looking at is this is a hierarchy. Now, I've got a graphic of this as well, but basically fundamental steps: start here, avoid. Uh, Avoid is the first one. Reduce if the activity can be avoided, if you can make changes that make it different. For example, the LEDs are cited here. Replace and substitute high carbon sources to low carbon alternatives. And increasingly, there are those low carbon alternatives. We talked to a client recently, and they're talking about recycled materials. So their raw material is now available in a recycled form. So it's not 100%, but they're probably looking at 10% of their uh, inbound materials are now recycled sources. So that begins to replace and substitute that activity, looking for that activity, and through your supply chain, through the talk here about solar and wind, that's the renewable energy, that substitution. Sometimes it has a premium, there's no doubt. Sometimes it does have a premium. So you've got that balance to make between the commerciality, the benefit commercially and the benefit from an environmental perspective. And sometimes the customer, your customers may be willing to bear the burden or share the burden of that premium if it's there. But in a lot of cases, just looking and a bit of negotiation, you'd be amazed at what you can find if somebody's looking at it with some determination. Next one is to neutralize and remove, and then finally, I'm looking at the offsetting. So at the end of the day, the offsetting is an issue. So graphically, this is what it looks like. And it's as simple as that. These are the ways that you can do things and you can cause things to happen if you're determined and you choose to do it and want to do it. And eventually, if you demonstrate what you're doing, you can be proud to do it, and your people will be. Okay, the target setting. As I say, the overall target is 2050, but we know that the intermediate targets that were set for 2025 and were set for 2030 are, for the most part across the world, going to be missed. Some countries, and the UK is a leader in this regard, they have driven very hard for the 2030 net zero for a lot of sectors. And really, what it is putting a big stake in the ground to say, we want to do this. And to some extent, it is aiding the large government initiatives. But how they're enforcing it, or I would say enforcing is probably the wrong word to use, but how they're encouraging it, shall we say, is that for most government in the UK now, most government, and particularly I would cite the NHS in particular, they're insisting that there's a net zero plan from anybody who sells anything to them. And literally those, I won't call them hurdles, but those the entry points for a tender in the UK to most government agencies now, particularly the NHS, that have a process developed around it. Basically, you will not sell anything to them, and you will not be able to bid for a tender to them unless you have a net zero plan, and they have a methodology of testing the credibility of it. And you're going to see more and more of that as we go forward. So. Based on assessment is the first thing. You need to know where you're coming from. You need to know where you are today. And as I said to you earlier on, if you can't get 100% on the scope 3 emissions, and you won't at the beginning, you'll always find, I say always, but you will find more scope 3 emissions as you go deeper and you go into the finer detail. So yeah, put a little bit of 5% other in there in your plan. Set the targets, and the reduction goals need to be realistic. I talked about the aviation industry. The aviation set very large. I suppose once you get past 2030, the probability is with there's a high degree of hope and a high degree of external dependence on some of the things that they put in there. But once you've sat down and you start to look at the plan, you look at the kind of initiatives that could be in place, you'll be surprised how hard your targets can get and how realistic your targets are. And then it's a matter of going off and doing the justifications to say whether you can afford it as a business or not. And in many cases, you'll find that, oh yeah, we can do that, or we can plan to do that. We can plan to put solar panels on such and such a building in 2028 or whatever. It becomes a plan. And once you've got the plan, then you've got the kind of yardstick to work against, and you've got the methodology to make the report. And once you begin the reporting process, it kind of gathers its own momentum. And publishing the report is also now a feature of an awful lot of the asks. Like I talked about the NHS, one of the things that you have to do is you have to make the reports public, and you have to commit to making the reports public. And when you go in and you apply to be a tenderer to the organisation, they are looking to see your plan. And they will I won't say they'll approve it, but they'll more or less agree, yeah, you have a reduction plan, and they will revisit it on an annual basis as you report annually. So you see more of that pressure. And the best thing to do with that pressure is say live with it. it's something that everybody will eventually do. If you choose to stand against it, you will find eventually that from a global, from a national, and from a business sector perspective, that you will be standing alone. This is just a highlight, and it'll be in the slide deck. It's not something I expect you to read now, but you can have a look at the progress of what they're doing. So basically, this is, they call it the Net Zero Supply Roadmap, and it sets out their plan. This is what they want to do, and they're looking for plans for all emissions. So they looked right through the scope one, two, and three, and so on. And they're looking for their suppliers to do that. And most of government, increasingly all governments, will be at this. This is not unusual in Europe, particularly in the northern part of Europe. The Nordic would be ahead on this as well. So dealing in Scandinavia, Denmark, Belgium, there's great movement towards this. And as we approach potential fines from the EU around the failure to meet the 2030 targets, you're going to see more and more of this happening. So get with the process. So the pitfalls, accuracy. I put it down here as the antidote to greenwashing. I talked earlier on about the kind of people. There's a cohort of people who are looking at this, and there's a number of them would say, well, this isn't working out, this isn't real. And the greenhouse gas protocol sets out the how, and there's an awful lot more around the how. There are organizations that use the emission standards. So, and they publish and update the emission standards. So these scientific calculations are going on all the time. And you find the people like DEFRA in the UK, they're SBTi, there are people maintaining those emissions factors. And again, it's all turned into the same currency. So in the pitfalls, I mentioned, and probably now mentioned too often, the complexity of the scope threes. But again, they're listed, they're available. If you want to go down into the complexity, fix the ones or access the ones that you know, and the ones where there's a whole lot of uh, peer experience. And once you do that, you've got over probably, I'm going to say most people between wastewater, travel, commute, they're probably going to get 75%, more than 75% of their scope threes readily. And then it's when you go into the materials of your componentry and you go into the top and bottom end of your supply chain and you go into your life cycle stuff, that's when it begins to become complex. But it's by the time you've got through the beginning of it, you will have a flavor for it. You'll have a knowledge of how to do it, and you'll be able to access systems that will help you with it. The graphic on the scope three, always one that, yeah, it talks a little bit about the life cycle, but your solutions, we looked here at comments, talk to the suppliers. Talk to suppliers. They have primary data. Others, your customers will be talking to you. Remember, they're talking to you as a supplier, and you will have primary data. You will need to provide them with primary data. They will press harder for more detail as they dig down in scope three. So you might as well be on that journey as well. We described here prioritization, talked about the hotspots, so you get an idea where it's at. Carbon accounting tools to better manage the model emissions. We would say that because we have the carbon accounting tool, as most of you know. We maintain it against the standards, and some of you, I know, that are on here this morning are already using it. It helps. Spreadsheets, yeah, they work to a point, but um, they become complicated. In any of this data gathering, if I was to give you a piece of advice, the most significant piece of advice I would give you is make a friend in your accounts department, because this stuff might be material. It might seem like a huge task for somebody who has a sustainability title or has wound up with the sustainability project. But your accounts department handles the invoices for all of the activity all the vendor activity, all the customer activity, all of your supplier activity. There's a focal point in the accounts department where the data exists. So if you have a friend in the accounts department, you are more than 50% on the road to a very good net zero plan and a very good sustainability journey. Okay. The role of offsetting. At the end of the day, this is the bottom of my upturned pyramid earlier on. And I suppose I should have said at the outset that there's Q&A or chat section in there that we'll deal with in about 10 minutes. I should be done through the slide deck. So we call it the final step, not the first. So at the end of the day, your business and I suppose I should also say there are two kinds of emissions. There's the operational emissions, and mostly what I'm talking about here are the operational emissions. There are also financed emissions. So if you're in the lending business, for example, there are emissions associated with the money, where the money goes. And so banks, credit unions, they have investments, and those investments will have an emissions factor associated with them. But some of the money, you can't have all the money involved in carbon reduction projects. So there is a monetary emissions factor associated with what they call financed emissions. And probably do a session for our finance clients on that particular space, that complexity of the journey. But if you set your financed emissions, because they will have an emissions factor, it's a variable emissions factor. And if you're in the EU, it relates to a specific chart. So that basically they measure off the amount of investment that is going into climate related actions and the amount that isn't. And they credit the amount that is, and they put a number on the totality of money. And that number has been reducing over time, and it continues to reduce, but it's a very hard and difficult thing to be certain about. So that's why they segregate financed emissions. So focus here on your ops emissions. And when you're looking at the end of your journey, you say, well, look, I have these residual emissions. They're not going to go away. We keep looking at them every year to make sure they're not going up or down. And we will buy offsets and basically we will achieve our net zero by doing that. Now, the quality of these matters. So the removal credits are carbon capture ones rather than just avoidance credits. That's protecting existing materials. But there's a lot of science behind this. There's still some argument at a certain level, but there are approved certification bodies, and those approved certification bodies are the kind of people you should look for. We, Calcurisk, our organization, this year, our 2025 reports, we got to the point where we offset our residual balance, having gone through the whole calculation process. We have in our Greenfield product a link to a company called CNOT. This is their certificate. This is what they give us back. And I just brought this up to show you the kind of projects that they're involved in and this is a US based company. They're fully certified. Now there's ratings here. There's AAA ratings. There's a rating system. So we will deal with them. But these are the kind of things that they're involved in. So some of it's nature based, and this is potentially global because some of it is in Africa, some of it is in Europe, bulk of it is in the US. These are different projects, and they give you a high level of detail of where this is and how this is done. So for those of you who know me, then you know I'm an optimist. You know that I'm big into direct air capture. I'm looking at the kind of technologies that are coming out to make this work. So this will be a growing feature of how people ultimately resolve this. They'll wind up investing in things like direct air capture. They'll wind up in buying the carbon credits off that when it's available. They'll wind up with sequestered forests. They'll wind up with all sorts of things in their portfolio. But bear in mind, It's not the solution of first resort. Go through the other processes first. And when you get to the end, these options are available. I give you an idea of some what the value is. So for some organizations who want to be or need to be net zero, this is an option. Always check reliability. Always be certain about what you're buying, where you're buying it from, and look for the high ratings. We're talking about AAA, AA, and the rating agency certifies these people on a regular basis. So reporting, and I will hurry up. Um, so reporting integrity is what we're looking at here, and frameworks, using recognized frameworks. Um, it it's seen as reliability rather than just marketing. You know, the beginning of this whole process, some of the large organizations went out and they made very broad statements about what they were achieving, and it was challenged. These things were challenged, and you'll have you'll have some scientists can pick holes in certain things, and they began to pick holes in these things, and there was a sense that this was greenwashing, so it wasn't real, it was double counting. A couple of big organizations. So the fundamentals of the is the protocol. The greenhouse gas protocol is fundamental. That's where it standardizes the calculation, it standardizes the metric. So then you start to look at science-based target initiatives, for example. This provides a structured pathway for setting the emissions reduction targets, and that's basically the scientists that decided that the 1.5 degree centigrade increase over the industrial period is that's the number. And they put a timeline on that. They're now actively revising the timeline because it looks like the timeline is getting shorter for that achievement, and it's actually getting quite shorter. Uh, so progress on the reduction is becoming more and more important. But basically, the scientists provide a structured pathway. There are organizations that you can register with. You can put your plan together. And you can do it over time, and they will test you. So basically, what they will do is they'll ask you to prove what you say on an annual basis, prove your targets. It's generally for big organizations that want to be able to use the badge of science-based target initiatives to say we are best in class at this. For me, it's mostly big organizations, but it's available if you choose to do it. And then the voluntary reporting standard. So you're probably all familiar with the debate that happened in Europe and the debate that happened across the world, with particularly when Donald Trump walked away from the Paris Agreement. The CSRD, the reporting method, the reporting structure, was challenged, particularly by smaller organizations. They look at this as just too onerous. It's too, what's in it is too easily challenged. We need simpler tools. We need a simplified version of this. Eventually, they arrived at a simplified version of this, and the reference back to EFRAG and the voluntary, the VSME is for SMEs. It's for small to mediums. The small to medium is quite large, actually. You know, you're talking about some very large organizations fall into this. To use this sustainability reporting standard as a guideline, focus on the word V. It's voluntary. You don't have to do it. Nobody wants you to do it, but at the same time, it's discipline that allows you to track how you're doing. It's like, and it is a discipline process, and it incorporates some of the S and the G part. I mean, my focus here today is the E, the climate piece, but the S and the G part is important as well. So you'll find built into this would be anti-slavery stuff, you know, and then the social piece. The social piece is mixed and varied, and it has to be contextualized. So whether you're in the community or whether you're doing something wider with maybe large charity, large NGOs, however you choose to do the social piece is captured in that reporting. The CSRD for large organizations, structured mandatory framework for the big boys, and you've got to fill it in. And increasingly, there's pressure to do it, and it's not simple. And basically, from what we've seen, for the most part, there are sustainability teams associated with the organizations who are uh, are obliged to do the CSRD. There'll probably be some movement downwards in it over time, but the pushback was so strong. The pushback was right across, basically right across the world. The pushback was so strong. I don't think there's going to be too many changes to it in the immediate future. I put this in sort of the no fluff policy. It's be honest about your missed targets. Don't be afraid to talk about things that didn't work. And you basically it informs the plan. It informs your plan. It informs things that you do. And be careful with success stories. Somebody will challenge them. There's enough people out there to challenge them, probably in your own community, possibly even in your own if you have an ESG committee. Just facts. Give them the facts. This is what happened. And if it didn't work, give them those facts too. And that's learning. And our always encourage we always encourage our client base to share the good and the bad. And we turn that into initiatives if they're good, make them available generally, and we probably put red stars against the ones that have been known to be tried and failed. Um, so reporting, this is the kind of thing that we looked at here. So what kind of things should be in a report? So auditable carbon emissions reports, and they're in line with the protocol. And I say that basically means that they are using emission factors, published emission factors that are certified, and they are using the same metrics. Comparison reports between two periods, super. That's where you see your progress. But, but remember, your business can be growing and your total carbon emissions might grow. But if your total carbon emissions are reducing on your cost per unit shipped or your emissions per unit shipped on an intensity metric, you are making progress. And that's important. Do not stifle the business. You cannot stifle the business in order to reduce emissions. It just doesn't make sense. Ultimately, your emissions will be reduced if you go out of business. So it doesn't make sense. You have to continue to do the purpose for which you exist. And you have to begin to do it in an improving emissions world. So satisfy everything you can do to reduce your emissions, but continue to do business. Location reports by total emissions is a very good one, and that's I mentioned the intensity metric. I'm probably overdoing the intensity metric at this point. Specific locations, you compare things between locations, you might find, well, why is that one? Uh, why is that one have higher emissions than that one? That kind of thing. You get down to that level of detail, and that informs action. It informs the initiatives where they should be. Um, I talked a little bit about the specific disclosure requirements. So whether you're looking at SBTi, B Corp, or the VSME, and the VSME, by the way, what is voluntary, it is nonetheless published. So if you're going to do that level of standard framework, if you're going to use that standard framework, you will happily publish that. Your net zero progress plan reports. It's like you often see the fundraising thermometers outside sports clubs or wherever as you're driving the road. That kind of progress. It motivates, it encourages, and it publicizes your progress. And the intensity metrics I've done already. Customer reports to satisfy any stakeholder sustainability expectations. This is going back to your scope three. So you are somebody else's scope threes. Your customer, your end of life, your life cycle stuff, depending on what business you're in. But you have to satisfy their legitimate requests and satisfy them as effectively as you can. And where you don't have the information, you have to then put in probably the plan because you don't know whether they're going to change their business practice because they can get sustainability data from somebody else, your competitor. So, the whole cycle is, it's in your best business interest to be involved in this cycle at this point. Um, Now we've got some sample reports there that you can take a look at. This is kind of what we're looking at here with the initiatives, things that are available, things that are in progress, and things that are completed, and that kind of motivates. That kind of motivates you get a sense of what you can do. And if you've got people asking, well, what more could we do? There's a whole list, there's a whole ramp of stuff that's available that you can do. And the other thing is, uh, we're always wide open to contribution on this. So people do stuff and they tell us about it. They do stuff, they tell us about it. We happy to share. Okay, I'm going to have a quick look to see if anybody asked any questions. Uh, what have we got? We've got nothing in the chat, and have we got anything in the questions? Oh, here, hold on a minute. Yeah, I got one question. Carbon offset should only be used in end product. When all other reduction efforts have been exhausted, the Science-Based Target Initiative generally does not recognize carbon offsets as a valid method for companies to meet their emissions reduction targets. Yes, true. That is the case. That the SBTi, there's pushback against offsetting and offsetting. So let me put. I suppose the best way to put it is this: if you're looking at a net zero plan, there is at the end an impossible. You wind up in an impossible place. So the SBTi, the SBTi will take your plan and it will manage on an annual basis. It will hold your feet to the fire on your targets. But if you're targeting net zero as a headline and SBTi choose to hold your feet to that fire, and at the end of the day, there are emissions that you cannot get to zero, that you cannot get rid of, uh, then the offsetting is the next best thing you can do. And doing it from validity. Like just think about this in a global sense. In order to satisfy a report, in order to satisfy somebody's requirement for a report, that's fine. But in order to satisfy your own getting to the end game, you may need offsets. We looked at our business, and when we decided to do the offsets, we had decided that we had exhausted the kind of things that we could achieve, and we went to that. Now, if anybody tells us that we should continue to squeeze, I mean, we would. I don't know where we'd go. We'd have people coming long distances on bicycles. It is. There's no doubt. SBT. I do make the valid point, and they do put us under. That they do put organisations under pressure for the continuance. But most of the people that we now know that are doing the SBI stuff are putting into the end of it a potentially unachievable target. Not a target, but they're putting a box in that says potentially unachievable reduction. And they're putting that on some of their scope threes. And that's where we see if somebody has a desire to be able to say that they're gone to net zero, that they'll reach for the offset. I've got another question here saying, can we get additional information on Greenfield? Absolutely. Yeah, we're on the website and we share this data and we'll send you a link to those reports. If I should someone with little knowledge of where to start to look into calculating our carbon emissions and take it from there, perhaps get an environmental agency on board, or is it feasible with resources to do it ourselves? Absolutely, absolutely. I said at the beginning it's not rocket science, and it's not. And there are organizations out there, it depends on the complexity of your organization, but there are organizations that will, they'll tell you anything, they'll sell you anything. Might even make a friend in the accounts department. You make a friend in the accounts department, you will get away straight away. You'll get access to your data from your scope one and your scope two. Also in the accounts department, you go in and you say to them, look, give me the top 10 people that invoice us for supplies spent. And then give me the top 10 people that we ship to spent. And they have that data. And they also have the names of the organizations. So now there's your journey beginning. It really is that simple. Now, I would say talk to us at the beginning. If you talk to Catherine here, believe me, you would get all the advice that you would need to get you started on your journey. Unless it's incredibly complex, that your business is incredibly complex. But it's the elephant. Bite, take take bites that you can achieve. Eat your elephant one bite at a time. Um, and don't stress your net zero plan. Don't stress it. Some people do, and what happens is they just get they get in trouble with it, and suddenly they lose they lose the confidence gets lost because the credibility gets lost. If you overstress what you're doing, well, just think about it. Most of the energy providers in Europe are now close to or better than 60% renewable. There's your emissions. So you get your baseline, what the 100% emissions are, then you've added 60% renewable on your energy. Suddenly your emissions reduction has begun, and you can make it visible by the simple act of changing your provider or specifying a a better deal from your existing provider in terms of the renewable energy. And so it goes, so it starts. It's really talk to us. It's made complex, I think, by probably too much high level discussion. This, you become fearful of it. It's not something to be fearful of, and it, it's a reasonable process. We think for many organizations, it's somebody takes on the responsibility, but anybody who takes on the responsibility as an additional responsibility of what they're doing, I go back to it again. Best advice, talk to the people in your accounts department. There is somebody handling most of the data already and getting a structured process to get them to share that data with you if you're responsible for sustainability is the best thing that you can possibly do to get down on this journey. And we're more than happy to show you how to do that, to help you with that. I think I'm done for questions, and I think I'm done for time. I share the answer to the questions. Actually, we write them up. When I say we write them up, Catherine and I will write them up. And we'll share that out. But look, anybody who wants to learn more about Greenfield, we're more than happy to. We'd be delighted to have you do that and to share that, which you did do. Sorry, I go back to our contact details there. Many of you will know us already, and yeah, we have all sorts of use cases and sightings, and a lot of our clients are more than happy to talk about us, and they think we're nice, and we are nice people. So, thank you very much for your time. Appreciate your interest in this, and as I say, we're sometimes get a bit over passionate about it. But the webinar is available on. It'll be probably sent out tomorrow. Vicky and the team, Pauline and the team here will send that out, and and if we can be of any help, if you are even remotely interested in taking a look at what we do and how we do it for you, then please get in touch, and we're happy to give you a demo and have a conversation. Thank you very much. I'm going to leave it there and close it out.